Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, tech stocks fall as oil prices spike again. Stoking fears the war in Iran will further crimp energy supplies and fuel inflation.
Plus, we hear from Michael Dell and the U.S. Energy Department Undersecretary for Science about Dell's work with the federal government on AI.
And new details emerge on Apple's entry into the foldable phone category. We'll break it down.
We will, but first, we turn our attention to global angst, to a conflict in the Middle East, and of course the market ramifications. We already understand from Bloomberg reporting this has cost more than $11 billion in the first week of the conflict, but the human cost, priceless. We currently see at the moment the Nasdaq 100 off by 1.5% as oil drives higher, stocks drive lower. Look at Brent crude up almost 9%. We hear from the Supreme Leader for the first time from Iran, the new Supreme Leader, who's saying, look, that Strait of Hormuz, he wants to remain closed. The US thinking about ways to try and push back on the supply chain issues. Bitcoin, risk assets, they're all lower. Ed, what are you looking at?
Those are the key headlines. Iran's Supreme Leader has called for the Strait of Hormuz to remain closed and warned that new fronts may be opened if the war persists. Here with the latest in the Middle East is Bloomberg's Jumana Basechi live from Dubai. And, you know, those are the two red headlines on the terminal, right? The latest in public address from Iran's Supreme Leader. Let's start there, but conscious, of course, that in real time, drone attacks continue across the region, including where you are.
Exactly that, Ed. And it is day 13 now of the Iran war with no signs really that things are letting up. And, as you can see, we have actually started working from home today. Many institutions around Dubai have actually advised their employees to be working from home out of precaution. There hasn't been a formal evacuation notice issued, but I think what has happened in the last 24 hours is the intensity of the strikes has really taken on a different dimension. And what you're seeing here is, the UAE has been extremely successful at intercepting many of the projectiles that have been headed towards them. Out of all of the projectiles that Iran have fired, about 2/3 have been directed towards the UAE alone, just to give you an idea here of context. But that's not to say that some of the fallen debris isn't causing damage on residential buildings, which is exactly the situation that we're in. So out of an abundance of precaution, we are, of course, broadcasting from home. But I will tell you that the tone still coming out of Iran is one of defiance. We had the first statement a couple of hours ago coming through from the new Supreme Leader, the son of the prior Supreme Leader, and he was saying that they will maintain the closure of the Strait of Hormuz. They are very aware of the cost that this has inflicted on the global economy and global energy infrastructure. And they've also warned that new fronts could open up and that they will continue to strike on U.S. assets. This coming after a very intense 24 hours of more vessels being targeted around the Persian Gulf, more fuel depots also being hit, set aflame. We've had disruption in oil supply, and analyst estimates vary, but any way you look at it, as long as the Straits remains closed, what you're going to continue to see is this upward push on the price of oil.
Jumana, I can only imagine the stress that's putting you on and all of your colleagues, your family at the moment. Talk to us, though, a little bit about what you think the impact is writ large on your part of the world. The UAE, not an oil force, it is a financial force. But how do you think that this focus on oil prices as well is changing the tone in the Middle East?
Well, UAE obviously is a very notable OPEC producer. And so, there are two dimensions to this. Of course, the focus from an economic perspective is maintaining the flow of oil and ensuring that production doesn't get permanently halted or disrupted. What has happened is with some of the key OPEC producers from the region, the likes of Saudi Arabia, Kuwait, Iraq, UAE, have had to manage their production levels simply because they don't have any capacity left in their storage. They're looking for other ways to get that oil out. You've probably heard about this east-west pipeline in Saudi Arabia that Saudi Arabia are leaning on as well. In the UAE, there's also Fujairah pipeline that bypasses the straits as options to get the oil out. But beyond the oil dimension, as you say, look, this is a part of the world that has spent decades painting this image of a place where the financial ecosystem can structure. They've created a whole ecosystem around it to bring in, capital and to bring in investment from abroad. And you even saw it when President Trump made a visit almost a year ago to this part of the world, talking about the investment and the opportunities in terms of artificial intelligence and the diversification strategies that these economies are pursuing. At risk here is that these projects are being severely tested by and undermined by the geopolitical developments with really no end in sight. And of course, this is the reason why these GCC states have been, one, for ages trying to avoid this scenario, and two, actively trying to work the diplomatic channels to make it stop.
Bloomberg's Jemana Basechi, we so appreciate you coming live for us from Dubai. Stay safe. Thank you. Now, look, a pro-Iranian digital activist group, Handala, has claimed credit for a cyber attack against medical technology maker Stryker. Now, the attack crippled the company's global operations, with many Stryker employees around the world unable to work due to the breach. It's all according to a source and a memo seen by Bloomberg News. Stryker is still investigating the breach and doesn't know when its systems will be back online. Joining us now with the details is Bloomberg's Patrick Howell-O'Neill from our cybersecurity team. And it's actually not the company Stryker that's telling us it's an Iranian impact cyber hack. It's Iran itself. How do we know that Stryker is dealing with this?
So yesterday, a little bit after midnight Eastern time, computers began to turn off in Stryker offices around the world. It was a bit of a frantic scene. Employees were trying to, once they realized what was going on, unplug the computers to save the data. And it interrupted operations around the world for the company. Employees were sent home. I mean, it was a full stop. Data was wiped on the computers and even on phones and devices, even personal devices, for employees that had, corporate software on their computers, on their phones rather. And then Handala posted taking credit for the attack and saying it was in response to a suspected U.S. strike of an Iranian school. And has said that they have a ton of data. But Stryker is, it appears, really recovering and getting back on its feet.
Patrick, this is a case study, right? Handala is a pro-Iranian digital activist group. What can you tell us about Iran's broader strategy, cyber strategy, in response to what the United States has thus far enacted in the region?
When you think about Iran's cyber strategy, you can easily put it into the context of Iran's strategy overall in this war, which is that it's defined by asymmetry. You can think about drones, missiles, the kinetic space for sure. And the cyberspace is just like that. They are looking for ways to impose cost on Israel, on the U.S., and on partners of those countries. And so they're opportunistically looking for companies with connections, companies that'll make a splash. There's a big propaganda value for doing things like this. What the actual impact is economically, the long-term impact to this company is to be determined, but it's a major propaganda win for Iran, and you can expect continued opportunistic attacks like this from the country.
Bloomberg's Patrick Howell-O'Neill, thank you very much. The conflict in Iran and across the Middle East continues to bring investor attention back to defense technology. Joining us to discuss is Lauren Webster, Piper Sandler, Managing Director of Investment Banking, and that's your expertise. It's not just cyber, but I look at the Bloomberg terminal every morning for the last couple of weeks, and the stories that are up there in the realm of tech are to do with defense technology. You must have the same conversation with clients on a daily basis.
Absolutely. And I think there's a couple thematics that are really driving investor interest in the category. And it certainly started before the current conflict. One was this push across the West, U.S., Canada, Europe, for sort of sovereign reindustrialization of their defense base. A lot of investment pouring into, we want to buy what we build in our borders. Two, more recently, the rotation out of the software sector, the sell down on AI concerns. That money hasn't just sat on the sidelines. It's been plowing into industrial spaces like defense technology. And then third, the current conflict is certainly bringing kind of a microscope to the space and really getting investor interest there.
In a war scenario, it's hard to determine what actually has changed, right? One of the data sets we track is non-classified or declassified dollars that go to the legacy primes for ballistics, right? And they go to the same players. The vast majority still to Lockheed, et cetera. Are you seeing actually this new group of largely private companies get real tangible traction in this environment?
Yeah, certainly. And there's a couple pockets that really plug into the ballistic space. And you're right, like we have a huge resupply requirement there. after expending so many in the current conflict. But one is in sort of the launch capability. And there's a lot of investor interest going into particularly private companies to be able to fuel the launch capability for those ballistics and munitions. So that's one pocket. The other one is actually kind of the picks and shovels around the industry. We have a whole manufacturing base we need to reconstitute here. And Europe's saying the same thing. We need to have our supply chain within our borders. And so it's not just ships, subs, ballistics, but it is the supply chain around that entirely.
Go a little bit, Lauren, not just in defense tech, but we think about cybersecurity at this moment as well. We were just hearing about what's happened with Stryker. How much is that a point of interest? How much are people willing to take on what has been some software anxiety around that area?
Yeah, absolutely. So I think you're right around sort of the interest and where it was, particularly in the SaaS sell-off I mentioned previously. Cybersecurity was not immune to the sell-down, but I see it as somewhat overblown for a few reasons. One is companies like Stryker, others, they know the threat is still very real in there, and they need effective cybersecurity tooling. So efficacy is super important, and a lot of the AI solutions are just starting to get there. Two is cybersecurity is actually going to continue to be a place that wins. It's a beneficiary from plugging AI capabilities into it. And so I think you're going to see cybersecurity companies continue to do quite well. They've done better than the broader software market, given both the threat and the opportunity from some of the new AI technology.
Lauren, are there any that set themselves apart that have managed to, A, sell themselves as a platform, not some sort of single point of service, but more broadly have intertwined generative AI ahead of the curve?
Yeah, you certainly saw last week CrowdStrike's earnings come out and just really strong performance from the business around this platform story. Look, it has endpoints, millions of endpoints, billions of endpoints that it is monitoring, and that is a data moat in the AI era. Second, they are using AI to really drive security outcomes for their customers. So you saw that bright spot in their earnings for sure.
What are you modelling for to happen in the duration of this conflict? What you are, as a team, discussing through the lens of different asset prices and how long you think, particularly the volatility in oil, right? That's the underpinning of what's going on. But the simple question is how long you think it's going to last.
Yeah, I wish I had a crystal ball for that.
Right.
But certainly, there's going to be near-term disruption. We have seen multiple points of that this year. First, the AI sell-off in the market, now the conflict. But I think long-term, we see a few opportunities with a significant growth outlook, and those continue to be defense technology, going from largely private to public over time, and we're really excited about that.
You mean Anduril?
We will see, yeah, certainly. But in cybersecurity, we expect to see a bounce back, too, as well.
Lauren Webster, it's been great having you on today of Piper Sandler. Thank you for your time. Coming up, another eye-popping valuation in the AI boom. We're going to that private market we just discussed. Cursor could nearly double its worth to $50 billion. That conversation next. This is Bloomberg Tech. Cursor
is reportedly in talks on a new funding round that would value the company at around $50 billion, nearly double its valuation from just last fall, all according to sources. For the latest, Bloomberg's Natasha Mascarenhas broke the story with the team. There's a lot of interest in Cursor. There has been for quite some time. They've moved quickly, grown the product, but this is a big jump in valuation. What are the details on the round? Who are the players?
Yeah, absolutely. So earlier this month, we reported that Cursor has topped $2 billion in annualized revenue. That's up from around $100 million in annualized revenue at this time last year. So the revenue growth has just been insane, which is basically investor catnip in this industry. We've also been watching Cursor focus on more in-house model efforts, which I would expect is a big part of why they need to raise new capital so soon after their last round closed just a few months ago. We don't know the lead investors just yet, but we do know, just looking at the market, so many companies are hitting revenue milestones or even new funding milestones, with yesterday Replit announcing that they had raised at $9 billion.
And Natasha, we've got the Replit CEO joining us a little later in the show. And it just feels that all of these companies are able to thrive simultaneously. The fact that all we talk about is Anthropic and its co-work and its coding a bit capabilities, OpenAI's as well, but still there's space for Cursor.
Yeah, absolutely. I mean, it's a little bit of a cliche that it's not a winner takes all market, because at some point it does tip over into it. I mean, when Cursor launched its product in 2023, in developers' eyes, all the big names of AI were missing. OpenAI didn't have a product. Anthropic didn't have a product. They were the model layer helping these companies. But once they saw Cursor's growth, and others' growth, we absolutely saw them put more efforts into their own products. My expectation is this year, similar to last year, we will see consolidation in this space. Last year, we saw Windsurf, a smaller company, get acquired by Cognition. I am watching the same thing this year because, to your point, despite the immense growth, there are just so many players.
I see a lot of headlines on the Bloomberg, right? Lovable is one out of Sweden, I think,
yes,
that's raised money. By the way, Cursor didn't reply to comment on our story, but I did put on X that basically, as far as I can tell, Replit, Cursor, and Claude Code just all do the same thing in a slightly different way. It is a competitive field, the AI coding agent space.
It's immensely competitive. I mean, think about also this whole idea of people being worried that their jobs are going to be automated away. You see engineers trying all the products, but they are going to pick one at some point. And so right now it feels like there's this arm race to figure out which is going to be the preferred coding assistant or software development assistant. And, day by day, we see these companies go head to head on it.
Natasha, it's great. You're on so much of the breaking news in the private area. Thank you very much indeed, Natasha Mascarenhas there. Now, coming up, a Hollywood star, AI, and a potential $600 million price tag. Netflix makes one of its biggest bet yet. More on that next. This is Bloomberg Tech.
Software firm Atlassian is joining rivals, blaming AI for massive staff reductions. The Sydney-based company plans to cut 1,600 jobs, about a tenth of its global workforce. Bloomberg's Brady Ford has the software space details. It is the latest one, right? The scale's not perhaps the same as what we heard from Block a little while back, but you have the details. Why is Atlassian doing this and what's it doing?
Well, this is the cool thing to do now if you're a software company, right? If you want to cut costs, you say it's due to AI. A couple of years ago, it was that you were flattening management layers, and yes, today it's that AI is changing the market. And there's some truth to that, right? I mean, Atlassian stock is down 50% some this year, and a lot of that is because investors are scared they're not adapting to AI correctly. So there is certainly some truth that AI fuels these cuts, but it's probably not quite as direct as some of these management memos make it out to be.
Oh, the old AI washing debate continues, Brody. And you'd just been breaking the news last week that Oracle was likely to be laying off many thousands of people, it might be understood. And after their earnings, it feels as though they've filed some formal paperwork. All of this seems to be building. Are we going to hear it from other software names? We've got more earnings coming after the bell, for example.
I think it's likely that we're going to keep hearing. I mean, this whole AI job displacement question has been going for years, and it seems like it's only ramping up. Yeah, I mean, tonight we have Adobe. Notably, they haven't done a big-scale layoff, and they're firmly in this bucket of a company that is kind of really facing a lot of skepticism from the market about their ability to compete in this AI era.
Bloomberg's Brody Ford, thank you very much indeed on all things AI and, unfortunately, worker displacement. But let's talk about Netflix now. Maybe shelling out up to $600 million to acquire Ben Affleck's AI startup into Positive. That's according to sources familiar with the deal. Now, the move would mark one of the biggest purchases ever for the streaming giant. Here with more, Bloomberg's Lucas Shaw, who covers all things media and entertainment. And, well, they couldn't get Warner Brothers Discovery, so they're going in on AI. And actually, its cash portion is less, but there's some quotas they should hit.
Yeah, I mean, the price was initially described to me as $600 million. I spoke to a number of different people where there is an earnout that would get to 600 and perhaps even more. The initial upfront money is less than that, but still a big payday for a company that nobody even knew existed really until Netflix announced this deal. Right. You know, Ben Affleck had been out there giving some really interesting public statements on AI, but it seemed just as sort of a curious filmmaker, not as someone who'd started his own company.
The performance triggers are interesting when you just stop and look at what Interpositive does, right? The tools that it makes allows filmmakers to alter existing footage. Will you just talk a little bit about that, Lucas, and why it's useful to Netflix?
Yeah, well, it's useful on a couple of fronts. One is this is an AI company that is founded by a filmmaker. It's for filmmakers, and if you listen to Ben Affleck talk, they don't train on a bunch of existing work that's already out there. You're not going to run into copyright issues in the way that Google, Facebook, OpenAI, et cetera are. You are supposed to upload your movie as you're making it or your TV show, and the model will train on what you have put into it and can then help you change your shots, adapt your shots, take things out, adjust certain backgrounds. And so it's exactly what Hollywood should want in an AI product, which I think is helpful to Netflix because most people in Hollywood are going to be very mistrustful of companies like Netflix and Amazon when it comes to AI. They're going to assume that they are out to do sort of what you were just talking about with Brody, right? Job displacement.
This is a lot of money. How large is the scale of the engineering talent, the scale of the company? How long has Ben Affleck been building this, basically in stealth?
The company is only a couple years old. The staff is still quite sparse. I think the number caught a lot of people, including myself, off guard, which is one of the reasons why we ended up reporting it, right? The news that Netflix was buying this company had already been announced. What I was most interested in was when I heard how much they had paid for it. But my understanding is that the company had been out looking to raise money in the private markets and was getting a valuation north of $1 billion. And so when they had the opportunity to sell, they didn't get a price quite that high, but it had to be pretty significant for them to consider doing it and essentially become a proprietary technology for Netflix.
It is interesting. We started the segment by saying, like, for Netflix, biggest acquisitional deal ever, and sort of completely have forgotten about and looked past what happened with the Warner Brothers Discovery bid. Fold that in, where we're at with it.
Waiting on what's going to happen with Warner Brothers and Paramount, right? Netflix is pretty much out. Paramount CEO David Ellison was on the Warner Brothers lot this week talking to some senior staff. They're trying to get that deal approved by the fall so that they don't have to start paying the ticking fee they have that would make their acquisition of Warner Brothers even more expensive.
Bloomberg's Lucas Shaw, who is the managing editor that leads our screen time team with the reporting. Thank you very much. Now, coming up on the program, we're going to hear from Michael Dell and the U.S. Energy Department Undersecretary for Science about Dell's work with the federal government on AI. There's a lot in that conversation, including about the government's attitude right now towards doing business with technology companies. Let me check my watch. It's halftime. We're not going far. This is what markets look like, a big focus on Iran, and we'll get back to those markets very shortly. Massive underperformance in chip stocks, as you can see on the stocks. This is Bloomberg Tech. Welcome back to Bloomberg Tech. The story that is impacting markets most is the war in Iran. We heard in a public statement from Iran's supreme leader that Iran intends to keep the Strait of Hormuz closed. The Nasdaq 100, incredibly tech-heavy index, down almost a percentage point and a half. Brent crude, the global benchmark for oil, we're back above $100 a barrel on Brent. And that is particularly relevant when you consider what is actually passing through the Strait of Hormuz. As it relates to tech, we're seeing some of the mega cap names, the Mag 7 in particular, under pressure. But, like, Caro, how similar is this theme, right? Look at Palantir, a name moving to the upside. It has news, a sovereign AI platform, an OS, an operating system it's doing with NVIDIA. But in this environment, a name that has seen some upside because of conflict, because of war. NVIDIA, though, itself, as I said, the Mag 7 name's under pressure. It is down 1.7%.
Let's look at another Mag 7 name right now, Ed. Apple. Well, its entry into the foldable phone category, the long-awaited device is set to have an iPad-like feature when it's fully opened, according to sources. Let's get more on Bloomberg's Mark Gurman, who, of course, broke the story. So, what, there's going to be a screen on the front, but also the internal screen is going to feel more like an iPad mini?
Yeah, this is pretty exciting. So if you've used an iPad mini, it has about an 8-inch screen. And now this foldable phone, it'll be kind of small when it's closed, but when you open it up, it'll be the size of an iPad mini. So basically an iPad mini you can fit in your pocket. And so with that, you're going to see an updated version of iOS 27 later this year. And some of the key features will be iPad-like layouts for apps. It'll run standard iOS. The other cool things here is that it'll be a little different from past foldables in that it'll have better durability. And then it'll also have a reduced crease. So it'll have a market-leading crease, so to speak. Right now, most foldable phones, you see that line in the middle. On the Apple version, it'll be much less visible, so that's going to be pretty nifty. And obviously, this is going to be probably north of $2,000. So it's obviously a good thing that they have the technology a little superior to what's on the market today.
Mark, take us inside Apple, not just in the story you put out yesterday or overnight, but all the reporting on this product over the last few months. Does management feel like this is big for the direction that Apple wants to go, that it's going to be one of the most high volume products, things like that?
I actually think it's going to be pretty niche. They'll sell some, maybe 5 to 10% of overall iPhone units in a year will be the foldable phone. But it is going to be niche from the get-go, obviously because that price point, which puts it at about double what you're paying for sort of the baseline Pro phones. And obviously some people like the current candy bar style, so the slab of glass style. They're also working on new versions of the regular Pro phones, so you'll see an 18 Pro and 18 Pro Max in the fall. Big focus there is on processor and camera. The phones will look basically the same as the current versions. And then a year later, as early as 2027, you'll see more of an edge-to-edge phone with more curved glass in honor of the product's 20-year anniversary.
Bloomberg's Mark Gurman, always with all things Apple. We thank you. Now, in Washington, tech giant Dell has been holding an event with its biggest customer, the U.S. government. Earlier, Ed spoke with Dell CEO Michael Dell and Undersecretary of Science at the U.S. Department of Energy, that's Dario Gil, who spoke about using AI to advance scientific discovery. Take a listen.
A lot of the themes that you were trying to get across, and I don't know what conclusions you've reached in the last hour with your colleague sat next to you, is that either government is getting it right in the United States or they're not, in where they're allocating resource, where they're deploying policy to build critical national AI infrastructure. What are the conclusions you've reached today?
We're seeing in government a number of the projects advance from the pilot phase to production phase. And certainly, Dario can speak to the ambitious initiatives, but, we have built a platform for open, scalable systems to enable all the great science that's occurring in the national labs and beyond. Certainly, we have a fabulous example in the Doudna cluster that we're beginning to deploy. And all of this is about accelerating science, scientific discovery and progress. And certainly, that's a huge priority. So great to be here with our largest customer, and we're very mission focused and making sure our solutions are enabling the mission wherever it occurs, whether that's in space, out in the field, and everywhere else.
Dr. Gil, there are case studies, right? We could talk, for example, about the progress you've made with NERSC, but zooming out for a moment, if you will. From the DOE's perspective, why is AI infrastructure now such a core part of national security and energy security implications?
Well, because we're in the midst of a computing revolution, and AI is at the heart of that revolution, and it is going to transform how science and engineering are practiced in our nation. The Monday before Thanksgiving, President Trump signed an executive order to launch the Genesis mission. And within that mission, we seek to harness this computing revolution to double the productivity and impact of America's $1 trillion a year R&D ecosystem. And science and engineering are at the heart of our progress and capabilities in national security, in discovery science, in energy, in health. And the example of the partnership that we have with the Doudna system in NERSC, in one of our 17 national laboratories, exemplifies the power of using AI to accelerate science.
Dr. Gil, is Dell and Mr. Dell sat next to you delivering supercomputers to the timeline you'd expect?
Yes, so for example, in that system that we're standing up, We already have an early access program where we stood up the first generation of nodes of the NVIDIA GPUs. System is going to be operational for the science community mid-2027. So I think one of the characteristics we're seeing right now is that we used to have supercomputing projects that would take a decade to build. Now we're building these things in 2 years. And that's a big change in terms of the velocity with which it's moving.
And one of the things that the government is doing is sorry to interrupt there.
No,
is
please carry on.
Leveraging the integrated, rack scalable systems that we're building for commercial and enterprise. And obviously there are enormous build outs in AI data centers, as you're well aware, Ed. And so, kind of, again, leveraging that open scalable architecture that we built will accelerate the government's progress in all of its AI infrastructure requirements.
That was Dell CEO Michael Dell and Dario Gil, Undersecretary for Science at the US Department of Energy. Now, coming up, startup Sunday raised $165 million as it works toward bringing dishwashing and laundry folding robots into your home. Speak to the CEO next. This is Bloomberg Tech.
AI coding startup Replit has raised $400 million in a Series D round led by B2B investor Georgian, valuing the company at $9 billion. Joining us to discuss the latest funding is Replit CEO Amjad Masad. Wonderful to have you with us, Amjad. And look, what's the money going to be used for? Because you're building it up in a swift formation.
Yeah, so there's a lot of product innovation to be done. So we're hiring more people in R&D. Replit is kind of expanding beyond just code. We think that code has become the universal interface for knowledge work. So we're seeing customers of ours, they're not just building apps, although that's a big use case. They're building automations, they're building slide decks, they're building marketing materials, they're doing all sorts of things with Replit. So we're expanding that, but we're also expanding internationally. We're seeing a lot of excitement around Replit in places like in Japan and South Korea. Obviously, the Middle East, we have this big partnership with Saudi Arabia, and that's growing across the Middle East, but also Asia. We were just in India for the AI summit there, and there's tremendous excitement there. We partnered with Razorpay, who's also a customer, and we're bringing kind of the Replit superpowers to developers in India. So there's a lot to do.
I have to do the follow-up of, if you are with significant exposure and growing in Saudi Arabia, how have things been in the last couple of weeks? Is that still growing as quickly as you anticipate?
It is. We haven't seen any disruption to growth or day-to-day operations. Obviously, yeah, we wish the best to the people there and hope we get to peace as soon as possible.
Amjad, you may see this as not fair, but if you put Replit alongside Cursor, right, alongside Claude Code, there are different functions, there are different strengths, but the base functions are similar, right? You actually also have a lot of investors in common with Cursor. How do you manage that and just basically say, no, this is what Replit does, this is how we're different, this is our moat or what we're doing best?
Yeah, so if you look at our customers buy Cursor, buy Claude Code, but they buy them for their core engineering teams. What are the rest of the company using? Code is democratized now. Anyone can build applications, can build software. And the most innovative companies in the world are opening their eyes to that and saying, we don't want to be left behind. We want our product managers to be able to ship software. We want our designers to prototype and get in front of customers as early as possible. And that's, not just startups. This is like, we're talking about, 85% of the Fortune 500 companies are using Replit. And the primary departments is primarily outside of engineering. So we don't really compete with them head to head on deals.
The benchmark right now in Silicon Valley, again, you can tell me if I'm wrong, but it's ARRs. You know, how real these businesses are coming in, how quickly. Take us inside Replit. How's things going financially?
Yeah, I mean, last year we grew 100x. We went from 2.5 million to $250 million. I said last year that it looks like we're going to be headed to $1 billion ARR in 2026, and we're on track. So I think that's really exciting. But we also spent a lot of time just making sure enterprise adoption is going as planned, because you mentioned Cursor and Cloud Code. They're going after established markets. We're telling enterprises that now you need to decentralize innovation. We're creating a new category of anyone can code in the enterprise. So
Right.
the thing we're most proud of recently is the adoption in the enterprise.
Amjad Masad, Replit CEO. It's great to have you back on Bloomberg Tech. Thank you very much. We have more funding news. Robotics firm Sunday has reached a nearly $1.2 billion valuation following a $165 million funding round. The startup is using AI to develop a robot that can do housework and plans to launch a testing program later this year. Sunday's co-founder and CEO, Tony Zhao, joins us now in studio. We just showed some video of Memo. You weren't able to bring Memo with you. It's quite big and quite heavy. But it's an interesting use case. What are you going to use the funding for? I guess in the first instance to kind of accelerate this testing program so that I can have one in my home, or anyone watching Bloomberg Tech right now can say, all right, I'll get one of those.
Yeah, 100%. I think the beta program is a really great way for us to both kind of exercise our muscle of deploying these robots into real people's homes, which is the first time these general purpose robots are deployed to like real homes. As well as deepening the research focus that we have internally.
I actually have my family in town, and they're here to watch the show today, and they know full well that, in the living room is the laundry, and it's not folded because of the difficulty in training me to do it. What is the technical challenge on the hardware side, but also software side? Dexterity to get the robot to fold laundry.
Yeah. I think the breakthrough is really about the AI that is behind it. You think about Gen AI as an AI that generates images and text, but we use it to generate actions. I think one of the most important part is how we gather the data to train this really powerful AI. And what we do is we develop this glove, memory gloves, and essentially we give it to people so that they can do the laundry in their own homes, and we capture that data to train our robots to do the same thing.
Skill capture gloves. So basically that's giving the data, the underlying data, so that the robot can learn. This was sort of a breakthrough that you made in academia, Tony, but I'm interested as to how the beta is going and how many people actually want them in their homes.
Can you repeat the question? Sorry.
How many people are wanting to sign up to your beta program? How many people actually want these robots in their homes?
Yeah, we have a huge wait list. We have more than 3,000 people who spend like 30 minutes filling up this whole sign-up form. And we're actually in the process of selecting people who will be participating in it this year.
It's all about getting robots in the wild. Now, I'm interested, Tony, we were watching a lot of these videos basically on fast forward. They're going at 4 times the speed than they actually do. What do you think your biggest learning will be in the wild? Where do you think there will be issues? Where do you think that they'll really overcome a lot of the concerns people have?
Yeah, I think for us, we're actually not super worried about speed because essentially if all your houseworks can be done by a robot, it's essentially like you go to work and you come back to work after 8 hours and all the work is done. So the part that we're really distinct is we do not actually need to train on data that is collected from the robot because we have this whole fleet of memory developers. So our interest and our users' interests are almost perfectly aligned. We want feedbacks. We don't necessarily need the data from your homes.
Bloomberg Tech executive producer Jackie Lopez has come in with probably the most important question of the day, which is, will it come with the hat? And why does Memo have a hat? For me, probably a more important question, particularly because it's not bipedal, right, is what are you going to charge for it and how are you going to charge? What's the model?
Yeah, I think the way we think about the robot we built is almost a perfect example of MVP, which is a minimum viable product that we try to simplify, we try to lower the cost. So in the beginning when we sell it, we're going to sell it for around $10K US, but just like personal computers, just like phones, it will get cheaper over time.
But it comes with a hat.
Yes. The hat is really interesting because we essentially imagine a world that the robots are everywhere, the ubiquitous, right? And we really want to make eye contact with the robot. And instead of putting the cameras inside the eyes of the robot, we essentially hide it underneath the hat. So it looks a lot more natural. You can make eye contact with it.
It's cute. Tony Zhao, thank you, CEO of Sunday. Come back, tell us how that testing in the wild continues for the company. Now, coming up, we'll dive into the wild world of special purpose vehicles, their role in the hot IPOs like SpaceX. This is Bloomberg Tech. Investors have been clamoring for early access to shares of private companies like SpaceX before their IPOs. But they're turning to the wild world of special purpose vehicles, or SPVs. They act kind of as a middleman structure whose main asset is shares of other private companies. But there are some questions around who really owns the stock or if it even exists. Bloomberg's Bailey Lipschultz joins us for more. And you really do this wonderful deep dive. Look, not every SPV is born equal. Some are more questionable than others. But what's amazing is that sort of co-founders of Anduril or the hottest IPO candidates are getting sent, well, SPV terms that they know they haven't issued shares to.
They know they haven't issued shares to. They're a company that is very outspoken about pushing back against these and just kind of the potential fees. And if you go on X, Palmer and Matt are very vocal about not wanting this to be a thing. And the big question is, if there's a market, why aren't people investing in it? And it goes to the whole debate about capitalism, right? If you are willing to take on these fees and willing to take on the risk to buy Anduril at 2.5 times its latest funding round and pay a fee to a manager, from the management perspective, why not? They're offering the deal. And from the investor perspective, hopefully you did your due diligence.
Bailey, to quote the great Shrek, and much like ogres, SPVs can have layers. That was good. Layers, donkey. And that, within it, buries a very complicated web of extra fees and what Kara was talking about, understanding within those layers, if the stock's even there at all in the end, if there is actually ownership of real cap table position in a private company.
Yeah, and I think that goes back to the question of, if you're invested in a co-invest on the cap table in an SPV, a so-called clean SPV, congratulations, that makes all the sense in the world. If you're being pitched an email that's saying, hey, pay me 2 and 10 for access to this SPV, but that's on top, that SPV is investing in another SPV that's charging another 2 and 10, and that's investing in another SPV that's charging 2 and 20. Well, congratulations, even if those shares do exist, which there are questions around that, if there is a liquidity event like an IPO or a sale, you may be thinking that you're only paying the initial fees, but in reality, what you end up getting distributed is much, much smaller because of those carry fees and that management fee.
Look, FOMO inspires a lot of bad behavior, and already you started to see bad behavior in this. There is fraud, or at least allegations of fraud.
Yeah, and one person settled those charges, allegations of fraud, that the shares never actually existed. So cold outreach, wire me your money, and even though I'm promising you not providing those documents that I actually own the shares of said private company or said fund, I'm putting it in my bank account. And we have seen settlements already. And the more people I talk to, the more this is potentially the tip of the iceberg, because you don't have these issues come to light until there is a forced event. So when there is an IPO, when people say, hey, looking for those SpaceX shares I owned, well, maybe they don't end up getting transferred to your account, and that's where the issues show up.
Bloomberg's Bailey Lipschultz with the big take. Thank you very much. That does it, Carrie, for this edition of Bloomberg Tech.
Your father-in-law should come in all the time. On fire, Ed Ludlow today. On fire. Don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart. This is Bloomberg Tech.